Without that, you couldn't grow our business. We also were able to grow our geographic expansion. We started out as a tri-state lender, and we are now we're an East Coast lender, and we lend in Dallas as well. We're very methodical about how we grow our geographic footprint.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. We are back again today with our guest, Marcia Kaufman, where we dive into that 40% growth. What caused that? You're going to learn a lot from Marcia today. And if you're looking to grow, especially if you don't have much experience in business yet, you need to think through a number of things that she says today and think through how I asked her this question about this growth, and she had it, just boom, 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 laid out these specific things, how they grew. And you're going to hear just how structured she is and the willingness to still pivot. And I just think that comes from a ton of experience in being a great leader. Marcia, welcome back to the show. Honored to do another segment with you. I want to remind the listeners, though, to go back and listen to yesterday's episode where she just showcased her expertise in lending, and everybody's asking about the lending landscape right now. And that, no doubt, is where she shines. So grateful again, Marcia, for the segment yesterday. I'm looking forward to diving back in today.
Great. Happy to be back today. Thank you.
Well, Marcia, one thing that's mentioned in your bio, and I've read a little bit about you on the website and whatnot, is this 40% growth since you've been CEO at Bayport. And I wanted to dive into that as well. I get questions all the time about scaling, how we've scaled, how we've grown to what some would say fast. But I think it doesn't happen by accident, more times than not, I'll say. But so I want to dive in there and maybe you can, help us just dive in on how you all have grown, what maybe some practical things you all have done, and let's talk about it.
So absolutely. Thank you. So as we all know, growing a company is not an easy thing to do, especially we had a lot of headwinds this last, 24 months. And we also had headwinds with COVID when I came into the company. We just right when I started, about a little less than a year later, we hit COVID. The reason I attribute the growth to is, one, we have a tremendously well-seasoned staff. When a borrower is looking to a lender to borrow money for their assets to build their business, they want to do business with a lender that is really steeped in knowledge, not people that can't talk to their business. So one of the things that I did when I came into Bayport Funding is I brought in some very well-experienced people in lending from a multifamily perspective that understood how to pencil and how to do deals and how to grow the company. So that's one. So I attribute a lot of that to our great staff that we have here. We have a phenomenal team. Number two, we were very fortunate to be able to increase our credit facility with our agent bank, where they had a lot of confidence in Bayport, basically based off of our performance of our assets under management and our lending criteria. So increasing our credit facility one of our facilities to $200 million was a huge advantage to be able to lend more money and grow the business. Without that, you couldn't grow our business. We also were able to grow our geographic expansion. We started out as a tri-state lender, and we are now we're an East Coast lender, and we lend in Dallas as well. We're very methodical about how we grow our geographic footprint. We want to make sure that we have boots on the ground, that we spend time in those geographic areas and understand the law of the land, and that includes landlord-tenant rules, foreclosure rules, what's customary from a legal perspective, a title perspective. So we're very methodical in that area. I also attribute our growth to increasing our market share. Because we're a balance sheet lender and it's our own money, we've been able to pick up quite a bit of new borrowers who during the past number of years were going to aggregators. And what's an aggregator? Because there was so much liquidity in the market, you had a lot of lenders that came into the business that weren't really lenders. They would originate a loan in their name, they'd sell it to another party, they'd sell it to Wall Street. So they didn't really originate and keep those loans and service those loans. They basically were super brokers. And when the sophisticated sponsor realized that they weren't dealing directly with a lender, but more to like a super broker that sold to another third party. They fled from those relationships because they were not long term to support what they needed, and we picked up quite a bit of market share. We also expanded besides our geographic expansion, we expanded our lending box to include ground up construction for multifamily and the 1 to 4 family investment properties. We do that heavy mid-construction refinance for maturity loans maturing off another lender, and we've expanded that box as well. So it's not only one area that attribute to our able to grow our business by 40%. It's an accumulation of all these different factors that have positioned Bayport to be a very strong lender and pick up additional business.
Yeah, love that. I love how you can just list out these things too. Like this is exactly what we did. Starting at the top though, it's even going back to yesterday's segment a little bit, talking about partnerships, right, and bringing in experience. You talked about people that are getting started in it, and you definitely had the experience, but you still knew the value in having seasoned staff and people that you weren't training right from the ground
No.
up in the very beginning. Speak to finding, how you were successful in finding and bringing on, the experienced staff.
Absolutely. So, initially the labor market was very tight and everybody was working from home, as you know. Everybody wanted to be remote. They want to work from home. People were asking for crazy salaries without the expertise. So we had a very tight labor market. So fortunately for me, I've employed a lot of people over the years. So it was easy for me to pick up a phone call to some of my old staff who were maybe looking for a change or have called me and they were looking for a change. So it's opportunistic for me to say, okay, I have an opportunity for you to come join us. So I hit the ground running because they knew how I worked. I knew how they worked, and that was great. And then, I don't have a work at home or remote philosophy. I know that sounds a little bizarre in this day and age with all the millennials wanting to work at home. I like everybody in office for a number of reasons. One, it becomes a much more collaborative environment. You can mentor people, and there's also more accountability. So you're running a much more efficient operation. I also like the separation between work life and home life. So when people go home at night as opposed to work at home, there's no separation. They go home, they take a break. So we were at work in the office. There's no remote unless it's people have something that they need to take care of, which we're very understanding and we're very flexible with. But that ability to have everybody work in office and build that collaborative, cohesive environment has been tremendous for Bayport. And it's been great for our staff as well because it's a great training opportunity for them to learn and to cross train as well. So unfortunately, as I mentioned, it was a very tight labor market, and we had to parse through a lot of people who applied for a job, and they really didn't have the skill set that was needed, and we just took our time to hire the right people. And we're very fortunate. Our team is very strong. They're very experienced, and there's a lot of cross training here at Bayport Funding.
Yeah, no doubt. Any special techniques you would highlight as far as narrowing down the search process? And we've talked about hiring a number of times on the show, but I wonder if there's anything that you'd say, this one little thing's helped us to go from 200 applicants to 5, or anything like that.
No, we tried very much like everybody else. We've tried headhunters and we've gone online like the different, online, Indeed and so on and so forth. Word of mouth is always great. Being at conferences or at trade shows or industry shows, because not only are you gaining business for new originations, but you often find people that are looking for a new opportunity. You have to let everybody know that you're hiring and what you're hiring for. And, within the company itself, if culturally everybody's happy when they come to work and they like the environment they're working in, they'll tell friends of theirs at other shops that, hey, this is a really great company to work for. And they'll often ask if there's an opportunity, can you submit my resume? So we've been very blessed with that as well.
Yeah, that's awesome. Speak to maybe the confidence to do, say, all 5 of these things. You talked about the well-seasoned staff, you got a new facility, you grew footprint, increased market share, and expanding to ground-up construction. Doing all of these things. Like, had you had experience in all these areas before, or was this through partnerships, relationships? What kind of helped you to have the confidence to do each of these things, to grow like that?
So when Bayport started, it was a traditional alternative lender for the real estate investor who was doing 1 to 4 family fix and flip or buy, fix and hold. And that really was the core for our business here at Bayport. And we're never going to forget our core business. When I came into Bayport to start operating the company, it accounted actually for almost 90% of our business. Today, it accounts for about 50%. What we did is we brought in to expand it into the multifamily, and that was a big reason for a lot of the increase, not only from a loan size, but from a market opportunity size. But before you expand into the multifamily, it's a very different asset class that you underwrite, originate, and lend to, and the loan dollars are greater. So first I identified the staff to support it before we did the loans because we wanted to make sure what we originated were good quality loans. What comes first? The chicken or the egg, the cart or the horse. I believe you have to really build your infrastructure to support the business you want to grow to. However, please note that when you're, responsible to your partner or your board, they want to see that, your expenses, and your revenues, when your expenses not outpacing your revenues, and you have to make the people that you report to happy from an economic perspective. So I was very fortunate because the partners were very supportive of understanding the importance of us growing and a very strong infrastructure. And not only did the partners understand it, our bankers who give us our credit facilities were very impressed with the fact that we added such a deep infrastructure to our business. And they showed that support in increasing our credit facility up to $200 million. All that, I don't think everybody realizes how difficult a task that is. It's not something that happens overnight. It was something that we really drove hard to. And our bankers, as well as the partners, really understood the value of it. And it all shows in the performance of our portfolio.
Yeah. Wow. Now that there's so much there that we could unpack, but I think it shows so much experience, from you, right? Being able to go in and lead in all those ways and make it happen and experience that kind of growth. Like you said, I think I said, and you said early on, it doesn't happen by accident, and you were very methodical and ensuring you're prepared right before you
Yep.
took on new things like a new facility or increasing the footprint and whatnot. So congratulations to you and the team there. Well, Marcia, as we move to a few final questions, we'll go through these kind of quickly, but what's your best advice for passive investors right now?
Best advice for passive investors: be realistic about what you expect for return and be realistic about risk. Not every investment can turn into a good investment, right? You want to, that's really the best advice I could say. Everybody has these pipe dreams when they make an investment that they're going to get these unbelievable returns. Know who you're investing with. Take a look at their past track record of what they've invested in their returns, and not everything always works out exactly the way that you planned. So it's always about risk reward.
Yeah, I think that's very wise. Be
Yep.
realistic.
Yep.
That's so wise. What about what are some of the most important metrics that you track? It could be personally or professionally.
For sponsors that we lend to, what metrics do we track?
Anything that's important to you. It could be in the business. It could be how many days you exercise. It could be how many calories you eat. It could be how many sponsors or clients that you all have. Anything.
So it's interesting you say that because I'm a very disciplined person, and I'm also a person who is very heavily relies on routine and structure. And that goes for, how many days I exercise, what I eat, and how I operate my business. Meaning that, I come in and I have certain set meetings and schedules that we do on a regular basis, whether it be, asset management, pipeline control, originations, meeting with salespeople. There are certain set things that we do on a daily, weekly, monthly, quarterly, annual basis, right? And I do my life the same way. But you can't be so rigid and systematic that you can't be prepared for being flexible and be able to pivot. So a perfect example of that, being able to pivot, was COVID. And COVID seems like so long ago, it was so 2020. We're going to 2024. And let me tie all of this into one great story. So COVID happens, and not only do I come with 30 years plus of lending experience, but one of the partners is also 30 years in from mortgage lending, or two of the partners, and the other partners are big, private equity real estate companies. When COVID happened, the first thing that we did, and we're a lender, is we pivoted to asset management. As I mentioned, we're a balance sheet lender, right? So we turned the spigot low on lending. We didn't turn it off, but we turned it low because we didn't understand what was going to happen. So as much as we're regimented and we have a way of doing our business, we knew right away we had to pivot to asset management, make sure that everything that our borrowers understood the impact of what was going on, and we expected our payments. We lend to real estate investors. We're a bridge lender. We're short-term debt for borrowers to come in to buy real estate, to acquire real estate for the purpose of value added, either to retain for the real estate portfolio or to sell for profit. That's our business in a nutshell. And these properties are not cash flowing properties when we lend to them from a bridge lending perspective. So when we underwrite these loans, a borrower can't say, well, I need the cash flow to pay your debt. These are non-cash flowing assets. So we underwrite the loans, we make sure that our borrowers have a certain amount of liquidity to support this debt until they're finished with their project. So the funny part about COVID is, the minute it hit, everybody had no money. They all had money a day before, but when everything shut down, they had no money. So once we told them that you do have money, and everybody was panicked, obviously they started paying. Plus we have full recourse on all of our loans, but everybody started paying. But to circle back to the question is, we had to learn how to pivot very quickly. And that goes with experience as well. And that goes also with how we, run our business. We're very structured. We understand, just like the Fed hike happened very quickly with interest rates, we had to make sure that our loans that we had on bridge loans, how were they going to exit? Do they still qualify for end loans to exit off of our loans? Did we lend correctly? That was the true litmus test. So these are things that you have to be prepared in business. You want to stay focused and true to your business plan, but you have to be able to pivot as the world and life throws things at you, whether that be personally or professionally.
Yeah, I completely believe that you're a very structured person. I think that speaks to the growth, and success that you've had, and that Bayport, just the team, has had as well. But I love the thought behind it. It's great to be structured, but there's times you do have to pivot, and you have to be willing to be flexible in those moments, and it's challenging, right? But usually that's big times of growth, personally, I think, and for the business, and get you out of that structure to some degree, or out of your comfort zone. Well, Marcia, last question: how do you like to give back?
So we give back personally and professionally, we give back in a lot of ways. We're very charitable we're very charitable. We contribute to a lot of organizations, not only money financially, but I give back in time, to certain personal charities, which, I won't disclose on this, and company charities that we, as well. It's very important that you give back of yourself, not only monetarily, but with time. That's one way. And another way, from a professional perspective, I really believe in mentorship. We see a lot of young people graduating college, starting their career, and they don't know which way to go, or people just don't give them the time to train them. They expect everybody to know everything the minute they graduate. We're very big on mentoring and opening the door and giving opportunity to people and helping them, whether it be an opportunity here at Bayport, or spending time to help them find an opportunity within colleagues that we know and relate, or other industries. I like helping young people get their start and supporting them.
Love that. I appreciate your willingness to give back. We need more people with your kind of experience that's willing to mentor. No doubt about it. That would have been very helpful for me early on, still would be, but just grateful for your willingness there. Grateful for you sharing, just walking through the process of this kind of growth and how methodical that was, those things that you put in place. But even going back to, you're very structured, but willing to be flexible and pivot, when the time calls for that. I think it just speaks to good leadership, and time and wisdom, in the business. So Marcia, pleasure to have you on the show. Grateful for your time, and tell the listeners again how they can get in touch with you and learn more about you.
Great. Thank you. And Whitney, thank you so much. This has been a real pleasure. You can reach out to me at Marcia, Marcia, at bayportfunding.com, or you can dial me directly in my office, always in local area code 516-441-5888. That's 516-441-5888. And please, anyone wants to call and ask me any questions, I'm always here to answer those questions.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.